Hi everybody, Eddie here, going to do market forecast with 2024. Everybody out there is calling for a recession. I think the recession is going to get delayed because I don't think they're going to start cutting rates till later in the year. So recession usually don't happen till months, sometimes up to 12 months after they start cutting rates. So we got plenty of time. So I think what's going to happen this year is we're going to actually go for a big parabolic move before the big recession actually going to come. What I'm thinking right now, we just hit all-time highs there. So I'm thinking we're going to get a little push up, probably to 4,900. If it get rejected 4,900, we should get come back for that retracement for 4,600 support level that we've been looking at for a while. That never happened. We thought it was going to actually come down this time and actually come back to retest that 4,500 to 4,600 level right here. Instead, we're actually broken out. So now that we're broken out, I think we're going to get a little push up to probably test the 4,900. If we actually get extended, it can go all the way up to about 52, 5,300 before retracement. So I'm looking for a push up and then but in presidential cycles, usually the first quarter of the year is a little bit weak. So I don't think we'll get too far away from this uh this coming month. But we could see a push into February and then pull back later in February and March, and then we will start to cycle up in around April, right? Usually around April is what you really want to take a look at for a bounce back up. So I'm thinking that we'll get a push up and then we'll get that a pretty decent pullback, and this is where you really want to get into onto the longs for the rest of the year. So this is a good area to get into, and then basically you'll ride it up towards September, and then in September we maybe get another retracement back. Usually on election years, October is the start of the big move where it start going fairly parabolic. So we've seen that in 2020 as well. So towards that election time. So I'm thinking like around October we should get like a really nice push into year end, and then into 2025, and 2025 is really where I think there might be some trouble, probably not till like mid 2025. Depends how fast we hit that 6,000 rate. So that's my target, is around that 6,000 area for the parabolic move. So if we hit 6,000 later on in the year, like mid 2025, you should start seeing that pull back and possibly hit into a recession after that. I think 2025, 2026 is where that time frame is when the market actually switches and start heading down. If for some reason we do start going down early, you're looking at probably hitting around that 55, 54, 55 area, 100 area before start going down. But if it gets extended, we should be able to see 6,000 before we actually start coming down. So that's really bullish. I think it this year is going to be more of a buy the dip type of market. Even though a lot of people think that it's going to be a recession this year, everybody's calling these doom and gloom on Twitter. So I think a lot of those people, actually, it's good for the markets when there's a lot of retailers think it's going to go down, because that's usually when it gets squeezed, and then it just goes even higher. So I think that's what's going to happen for 2024 is we're actually going to get a push up, and then come back for retracement, and then after retracement get some shares. You might actually just chop around between May and like during the summertime till around August, get maybe like a July, August, get a push up, and then a big pullback in September. Usually that's what happens, and then you really want to see a big pullback in September because that sets the tone for people to start loading up for October and towards the end of the year for the election. So you do really want to see a pullback around that time. You don't want to see it go parabolic before that, because if it goes parabolic before that, then it may not play out the way that it would. It might trigger the time frame a little bit earlier for the pullback. So that's why you have a projection for the year, but always use the price action to dictate how you're going to trade the markets, because that's what I do. Like I'll have this projection, but if things change, I know how to change with it, right? That's why it's a good idea to be able to analyze the price action, so you know what to expect, and when the market does start turning a little bit earlier or later, then you can profit off of it, right? And that's why, like, having a community of traders to analyze the markets with, and discuss like the potential price action stuff like that can really help you throughout the year on market cycles, right? So yeah, so that's what I think what's going to happen with the S&P. So my big play this year is actually I'm going to be very focused on Bitcoin this year, because we're in that Bitcoin has a 4-year cycle. So usually they have this halving cycle for Bitcoin. So I'll go on this chart. So I marked the date where it was halving the last few cycles. So if you can see, whenever it start doing the halving cycle, it goes relatively flat for a few months, and then towards the end of the year, you get that giant parabolic move into all-time highs, and usually this all-time high gets hit about a year into the halving cycle. So don't expect it to go up right away during the halving cycle, right? It's going to go sideways. Sometimes it's down towards that time, and then towards once it's set up, then you get the giant parabolic moves, and that's the time where you really want to capture the big money, right? During this time right here is accumulation time. Right. So during the halving cycle, if there's pullbacks, you want to slowly accumulate shares of whatever your favorite Bitcoin stocks, or even now you can buy the Bitcoin spot ETF. So that probably would be a safer bet. You want to just play Bitcoin, because if you play like Bitcoin miners, you can still trade Bitcoin miners, but the Bitcoin miners do have some risk because they tend to do offerings when it goes parabolic like that. So it happens many times in the past. So that's a very big risk when you're trading just miners. So it's good if you're going to get exposure into Bitcoin. Be a little diversified. Have some miners, have some spot Bitcoin, maybe some ETFs, and that way it'll help you profit off this giant move right here and lower your risk overall. Right. So you can see that the cycle usually, whenever it starts, like here it starts, last time was in May, and the peak was in November of next year. Right. So that's about a year and a half before you hit the actual peak. Right. So that's a pretty good time frame to look at for our cycle as well. So the cycle comes in about April of this year, April 22nd. So right now it's at a high, this high right here. So I expected to hit the high, and we did. So now we're going to form a handle. So you can see that this is a cup and handle type of pattern, right? So if you look, we should go up there, and we should come back towards around that 50 period moving average. So that's around about 35,000. Now, if it gets extended, we could test the 200, which is all the way down here at around 30,000, right? So there's a chance of it to come down quite a bit, right, before the big run up. So these are buying opportunities, right? Because you can see we're still making higher highs, higher lows, right? So these are buying opportunities, and these are dips. This is probably the last dip you're going to get before the big run up. So this is the time when you start pulling back, you start adding. I already have a very good size exposure to Bitcoin through miners, but on the pullback, I'm definitely going to add on to it coming into this era right here if it does pull back. See that the thing is, it doesn't always pull back. So sometimes you just go sideways and slowly drift up. So that's why you can't really just like wait for the pullback, because if you wait too long, you might miss the entire thing, right? So that's why you always go in with layers when you're investing. So this is more like a investing strategy, because it's a lot longer play, because you're gonna hold on to this or trade around this for the next year and a half or so. right? So you're looking for whenever it pops, you want to trim. Whenever it pulls back, you want to add on to it and ride the waves up, right? So usually what I trade, like the way I teach my students is you always want to have a core precision when you're investing, and then you have a trade around precision, meaning if you plan on 1,000 shares overall, right? Have 500 shares as your core position, right? And the other 500 shares go in and out in layers, right? That way, you don't catch the tops, you don't catch the bottoms, but you can work around and profit off that while the fluctuation of the market goes up and down, right? While you don't miss out, because sometimes you try to time the market, it's very hard to time the market, especially if you don't have any experience, so that sometimes you think you'll go down, but instead you'll just start flying upwards. Then you miss the entire trade, you're out of the game if you exit your entire trade, right? So that's why you always want to have a core position, hold on to hit your main targets, right? While you have other trading positions where you can profit off the dips and then the rallies. So you sell the route rips and you buy the dips until you hit your target. So you can trade around those, and sometimes you make more money, sometimes you make less. But if that's the way you want to trade, right, that's the way to do it, is to have a core position and then trade around the momentum, right? And there's different ways to actually trade momentum that I teach in my course and with my students. So and it's all about risk management when you have a trading position. So there's different ways to play it. Um, so this is the path I think that we'll go for Bitcoin. So Bitcoin does have cycles as well. Their cycles goes in 4 years, and then usually around 200 periods, give or take 10, 20 days, and sometimes they go in those peaks and troughs within that time frame. So right here, I'm thinking Bitcoin will come down towards maybe April, and then like it's going to correlate with the stock market. So if the stocks are going to come down towards April, so will Bitcoin. So if Bitcoin come down towards April, right, and you start seeing some kind of bounce or support around that area, that's the time to really get into it. And that's the time where you really want to start loading up on it, and then get that big move into the summer. So we're going to get a summer rally, and then usually around at the end of summer we get a pullback. Sometimes it's pretty severe, especially in September. So we get a pullback in September. And the time to get in will be October. So in October, you should start seeing that sharp move up afterwards, right? So I think right here we're going to start pull back. We'll come back to around that 30, 35,000, and then we're going to rally up. On the rally up, we pretty well should hit somewhere around the highs right here. And then if it goes with a shallow dip, we should go beyond the highs and hit about 80,000. So that's the target for the first wave. First big wave is around that 80,000 area. So we're going to test the highs right here, breaks through, aim for 80,000. At 80,000, you're probably going to get some pullback or some short. And then once that happens, we're going to get that big giant move up. That should bring us to at least 120,000 or beyond that, right? So it really depends on the momentum once it gets going, especially now with the ETFs. There will be a lot higher demand. It'll be a lot easier to buy Bitcoin. So like for someone like myself, I do not buy Bitcoin itself, on an exchange. The reason why is because I got screwed over a long time ago when I bought Bitcoin, and then the exchange actually went the CEO of the exchange went missing, and then all the Bitcoin was gone. So I lost all of my Bitcoin, and I bought those down like in the early like 2000 range, right? So imagine holding on to those. Now they're worth a lot more money now, right? But I end up losing the Bitcoin, so I stopped trading Bitcoin on the exchanges, and the only way I trade through them now is through miners and ETFs, right? So now with a spot Bitcoin ETF, it's going to be a lot easier. And for people that don't trust those exchanges, right? Because they get hacked all the time too, like Beyond and stuff like that. They get hacked all the time. So, it's not something that I'm comfortable of trading on an exchange. I much prefer something that's regulated, like an ETF, right? So, and that goes with a lot of other people as well. So just imagine all the people that wanted to trade Bitcoin before don't want to get that exposure to the exchanges can now go and buy ETF. So that's like our your investment accounts. A lot of people that can allocate some of their money into Bitcoin in their investments, right? In their retirement funds. And there's a lot of money there, right? So if there is demand and there's and lots of demand coming through, and that's how you get that big parabolic move, right? So Bitcoin, there's only a certain amount of Bitcoin that's going to get produced. So the halving cycle actually reduces that rate Bitcoin's going to be mined. So it just means that if there's a lot of demand, there's not a lot of supply. And what happens when there's way more demand than supply? Prices go up, right? So how far it'll go up, that's a different story, right? A lot of people got gigantic numbers on Bitcoin. All I'm aiming for is the easy money, which is 80,000 would be the easy money. And then if it makes a higher low after that, then I'm going to aim for that 120, right? So I can make that easy money, right? That's all I'm going for is the easy money. I'm not going for the all-time highs and not going for like $1 million or whatsoever. I'm going for the easy money. And that's how I've been trading the markets my entire life is go for easy money. And it works for me because it takes me out whenever the momentum changes so that I can make the easy money and then I can wait and buy it back at a better price. So that's just the way I trade. Now let's go back to the other cycles. Like this is let's go back to the like so that's the big cycle. So look at these smaller cycles, right? Look at these smaller cycles. I'll use a daily time frame so the chart will look better. Right. So that's the last cycle right here. So last cycle right here. So you can see that there's a lot of volume coming through right here into halving, right? And then the volume actually dries up and goes sideways for a while. And then finally when you start moving again, you see the volume start picking up and then you get the big giant parabolic moves, right? So there's a lot of profit taking right here. You can see on the volume, right? And then you rally up for the second try, you see that there's less volume because majority of people got out right here already, right? So they did another push for the second part of that rally up to make that all time before the big flush down, right? So you see after that, usually whenever Bitcoin hits all time highs, it comes down about 70 to 90%. So just make sure don't aim for the all time highs, aim for the easy money. Like if I had a choice, I probably would have exit right here, right? And then I would have, if he held on to supports, I would have bought it back in, especially if he breaks the high right here. I'll go back in and I'll ride for the second wave, and then I'll just use risk management to get all my trade, right? And then after that, after you hit that high and you start timing the reversal, with technicals, right? You can ride it all the way back down again because you can short these things through miners, right? So when Bitcoin goes up skyrocketing like this, you can short it back down afterwards, right? You can make money in both directions. That's why I think, in the next year to year and a half, there's going to be a lot of money to be made in Bitcoin, in other stocks as well. So the last time we have a big giant run like this is like 2020, right? So in 2020, a lot of those high growth names also exploded. So when Bitcoin goes, usually those names goes as well because it's a risk on environment. So whenever there's a risk on environment, all the high growth names start exploding upwards, right? So if that's the same scenario this time around, there should be a lot of opportunities to make big money, especially on those names that's been destroyed in the last 4 years, especially those Kathy Wood stocks. Right? They all got destroyed. So if those stocks start moving, then you know that we're in an environment of risk on. And when risk on is going, you really want to start leveraging your money and profit off of it, right? And that's where if you have the experience from previous market cycles, then you know exactly what to do, right? And that's what I teach my students to do. So, and if you don't understand that, you can always join us. We do have a Discord channel. I'll show you a little bit later on. The links are in description below. So, and look, the cycle before that, like this is the cycle before that. So you can see right here as well. So this is the halving cycle right there. I think that date was in July 9th of 2016. So you can see that we have a big rally up into that cycle halving, and then it drops just before it, right? Just before that cycle. And then as you can see, it goes sideways, and then it made like this big giant dip afterwards, right? So he lured all the people in and then kind of pushed them down. take their Bitcoin, and then finally it start going into the big rally up. So you can see right here, it's slowly going up, and then you start seeing volume start picking up over here. And then as it continues to go up, you see the volume just keep rising and rising and rising, and that's what you want to see in a bull trend, right? So you can see that the volume just continue to rise, and finally, you after let's see how long that cycle was. That's July of 2016, and you hit the top in December of 17, right? So about again about a year and a half or so before you hit the peak. So that's the time frame you should give yourself. So if our halving cycle starts in April, a year and a half from now, from then should hit the peak. So if you have estimation of how these cycles work, then you can actually have a projection, and then what you're going to do is have a trading plan, right? Use the price action and trade around to get to that cycle top, right? So just because it happened in the last few times doesn't mean it'll happen all the time. Sometimes it's you start reversing before the cycle before the year and a half. Sometimes just a year, right? So you want to prepare for that. So you have to understand how the markets work and how the structure of the market works, and where you can enter and exit and have that trading plan, right? So and that's where it comes really handy if you are trading with somebody with more experience that gone through these cycles before, and know how to trade technicals, because no matter what people tell you, fundamentals don't mean nothing nowadays. It's all technical. So we see right here, this is the other cycle right here. So that's the other halving cycle. That's in November of 2012. You can see right here, it rise into the cycle, and then it just slowly drifts it up, and then right here is where the volume start picking up, right? So this is a few months after the halving cycle, right? The volume start picking up, and then you get that big giant move, and you see the volume just keep picking up as it goes higher, right? And when you finally see the tops, you'll know when it's the top because you'll see giant volume, giant lots just being dumped, right? And usually that's the first. They usually have a couple tops within that cycle. So the first one's usually quicker, and then what it happens is you'll drop, and then you'll go for another cycle again later on. Sometimes it goes like that, right? So you can see right there, it has that drop right there, right? And then after another few years, right? Boom, big giant up move, and that's just how Bitcoin works. It goes through these cycles. Like if you look back with the data, you can project the time frames between one cycle to the next cycle, and look at what you expect on your current cycle, right? So you can see right now we're running into that cycle, and likely we're going to, like I said, we're going to get that pullback into the halving cycle, and then maybe you'll just go sideways for a few months before the big move. So I'm thinking like October is where the big move is going to be. It might be earlier or a little bit later, right? But I think towards election time is when it's really going to push, like when the markets are start going towards around that same time. And it's a risk on environment. Everybody's going to jump into Bitcoin. And I think that's going to be the big play this year, will be Bitcoin. So I have a trading plan for Bitcoin. And like I said, if you want to see when we get in and out of Bitcoin, just join our Discord. Probably best you actually understand how to trade. So we do offer some courses on how to trade technicals, and that will increase your probability of trading in the longer term. So the way I see it is I try to project what the year is going to be like, and then what I do is go into the lower time frame and then trade the technicals around that bigger picture scenario, right? Anyway, let's go through the other indexes and see what's going on. So as I said, we just hit the all-time highs, and we projected SPX. Now we're going to look into the mid caps. So the mid caps and the small caps are still not making all-time highs yet. So it's already all-time highs on Dow Jones and on the Qs and now SPX. So I'm kind of looking for these two to actually start picking back up. And the reason probably why it's not moving up is because interest rates are high. So when interest rates are high, the smaller caps don't actually perform because cost of borrowing is too much and it's hard for them to get capital. So they can't grow like they should be growing, right? So that's why they perform really well in low interest environments, right? So if you think the interest rates are start coming down, um, I think they say they're looking at now like in May or July for rate cuts. So these names right here, they may struggle a little bit, but they have some catching up to do. So if they do start moving like MDY here is mid caps, you can see that we actually broken out of this range right now. So it's kind of broken out. It's just kind of resting on the top of that range, right? So if you can hold this level right here, you can expect that we're gonna make all-time highs, right? You can kind of expect that we'll first try the high, and then if we mix another low, higher low, boom, we break out, right? So that's where what's going to happen if this is the case, right? You can see that it's kind of like a cupping type of pattern at the top, and these are really good because when you have a cupping pattern at the top and it breaks out, it has a long runway, right? So whenever this break out, it's going to really take off around that time. So if interest rates start cutting around May to July or whatever, I think that's when these names are really going to start performing, right? Because right now, they're still within the range that this is IWM. So usually IWM performs really well in the first quarter of the year from January. I think this year it did not. I mean, it ran up into that, and then it made like a pullback towards high seasonality for it. So maybe it's because it got a little bit too extended. So now that it's pulled back into support, I am looking for it to make a high low around this area. So around this zone right here, right around that 187 to 186 around that area, 187 and 185 around this zone right here. So if it does come down, so far we're bouncing off that first 180 187 area, which is this high right here, consolidation from before. So when you see there's a volume shelf over here, so that there is a demand level right around here. So you can see it's bouncing. So if we actually does start bouncing, go back above the moving averages, and then goes back above this the high of the range right here, going back above that and start breaking this high right here, you can expect it to actually start moving up and entering back into this zone. So this is a huge supply zone right here. So it's going to take some time to break through it. And it's going to take a lot of volume to break through it. So that's where I'm going to aim as a target, first target. And then if it actually holds on to that range, then we're looking at breaking out and making that all-time highs on IWM. So this is RSP. RSP is equal weight S&P 500. So you can see the equal weight, we're still not making new highs yet. So it's still falling behind compared to other indices. Right. So there's still some catch up and there's still room to go. As you can see, it's flagging right now. So this is like, kind of like a bull flag. So if it actually holds above this moving average up here, and then possibly we're going to get that big rally up and creating into that new all-time highs, right? So there might be some rotation in order to do that because right now the whole reason that the market's gone all-time highs and everything else is still falling behind is because a lot of the money is into the Meg 7, right? So the Meg 7 still outperforming everything else, and all the money is flowing into the Meg 7. And that's why all the other stocks, it doesn't even matter about fundamentals. And the other stocks, they're all making money. It's just that they're not moving because everybody's allocating their money into the Make 7. So that's why it's a very different market. And if you're too focused on just looking at how the index is going, you may miss the big trades because the big trade obviously was in the big seven last year. So this year we don't know if the other stocks are going to play catch up and the big seven start going sideways or pausing before the next leg up. So pay close attention to the rotations in the markets because sometimes the money flows into different sectors just so that when the make sevens are overbought, instead of the market coming down, what happens is they do a rotation, right? They move the money from the make seven into the other sectors that are not performing as well, so that they can catch up to the price, because they'll have better value in those sectors, and then they'll push it up, and then finally, when there's news or whatever, or if the make seven pulls back into support, the money rolls rotate back into those stocks, right? So if you compare it, you can see this is the growth in the growth sectors into the S&P 500. We're well behind the all-time highs. All-time highs is all the way up here. We're still way down here, right? So it has a lot of catching up to do. If you look into the value names, which is a lot of the Make 7, you can see that we broke the all-time highs a while ago, right? We broke the all-time highs like back, where was this? That's in June, right? Broke the all-time highs in June, and now we're making even higher highs, right? So a lot of the money is flowing into those names. So there is a big divergence between um, the growth names and the value names because the not divergence. I mean, there's a lot of difference between the growth and the value names, because a lot of the money is flowing into those Mag sevens, which is part of that value index. So, that's where the money's been going. So, if the situation changes, and I think that's because the inflation is so high and the rates are so high that, these bigger companies like the Make Seven are more immune to high interest rates versus the growth names, right? So when interest rates start coming down, I think that's when these growth sectors within the index will actually start coming back and outperforming the value names. So let's take a look at some of the Meg 7. So Meta is just broke all-time highs actually. So imagine you bought down here. I actually didn't like Meta down here. I actually hated his stock. I thought it was gonna go lower. Um, well, I wouldn't say lower. I hated stock up here, so I knew it was going to go lower from there. But from here, it kind of looked attractive. I just didn't like the stock. For some reason, because I think their metaverse just completely suck. They don't even have legs. So I'm a gamer, so that for me, like a game like that, just very unattractive for any type of gamer. So I thought they have a lot of work to do. So I didn't like the stock whatsoever because they say that that's where they're shifting their energy into, and I just like that's a bad move because your game sucks. So anyway, big V-shaped recovery. So I missed all of this. I caught some of it up here, but I mean I missed the big move. So whatever. We caught some bigger moves in other names, but it doesn't really matter if we got Meta or not. So anyway, it's at all-time highs. It's in parabolic state. I'm looking for a pullback before making new highs. So this is what I mean. Like they have earnings coming up. So if earnings are good, maybe they'll break out. If they do break out though, then there's a whole other leg that's coming, and it's going to be a big one, right? So if it does break out, you're looking at like big run up. It might break out, retest, and then boom, $500 or something like that, right? So there could be a pretty big cycle coming if the market just keeps up. I think these themes will go parabolic, and once they go parabolic, they'll get way overvalued, and that's when we get a recession. So and then they start come dropping. So that's just why I looked at it. Uh, Tesla. So Tesla is not performing whatsoever, mainly because their margins are getting crushed by all the discounts that they're doing. Well, it's just formula for disaster when you're lowering prices and cost is increasing from parts, and yet there are low prices. That just means margin squeeze, right? So you can see right here, it's actually very bearish looking right now. It's below all the moving averages below the 200. So and a lot of people think it was breaking out, including me. So when it broke out right here, I thought it was gonna go, but once it started breaking down, I choked my exit. I did held on to a core position, which I also took exit on early on the week, and I bought some hedges once it broke through that 200 period moving average. So around that 230 area. So once it broke through that, it was I had to hedge it, and then now I'm complete out of it. I'm actually looking to short it if it doesn't hold this low right here. So if it goes up, retest and fails and start coming back down and break this, it's going to come down to 150, right? So just look for that retest. If it fails around that 230, watch it come down further, right? It because I think they're having a hard time right now. So and Ellen doesn't really help with his tweets either, so so it's not really a stock I would want to be in until he actually breaks out of this and makes a higher high. Once it breaks above here, then it can pick up some momentum, but right now it's not looking good, and I don't really want to touch this. And even if I'm shorting it, I'll be mildly shorting it. It's not Tesla's not really a stock I enjoy shorting because I know the type of momentum you can get on the other side of the trade. So moving on, Amazon. So Amazon's heading into this big supply zone right here. So that's why it's not making new all-time highs because there's just so many people looking to sell up here. You can see right here the supply shelf. So right here, it might take some time for it to chop around up here before it can go any higher. So it's not. It'll depend on earnings too. So I don't know. Uh, I have some stock in it earlier in the year, and I rolled this up, but I sold it around right here. So I traded a little bit right over here. So right now I'm actually not touching this until either it pulls back and then make a higher low. That way I can give it another try into this area. If not, if it just keeps going, it could go up and then retest, and then if it holds, then you can probably add on to it, and then retest the highs to see where it'll go. But other than that, this is not really an area you want to trade because it's entering into this heavy supply zone. So Google, Google is almost making all-time highs. It's at the top there. Nice V-shaped recovery. Um, so this was one of our core positions, and I've been training ever since it started coming down to these big giant names. If you look back at our videos a few months ago, as we were coming down, I was talking about our trading plan to add into these areas right here, just dollar cost into it, and then ride it back up. So that's exactly what we did. We dollar cost average into it by selling puts, and then taking shares, and then on the way up, we just rolled it back out with the shares. I didn't leverage on the options on this because I wasn't sure um, how much momentum we're going to get. I only started going in with options a little bit later on into the cycle. So we still managed to benefit some of it, but majority we were just riding shares on that. So Nvidia, um, don't try to short this stock. I've seen so many people try to short this stock, and they're getting killed because you don't short a stock that's having high momentum, good news, and basically telling everybody that they have a ton of sales coming, and like I think Facebook said they have a giant order they're placing in. So I think valuation wise, they used to be very, very expensive, but now with the revenue and the growth actually meeting up with the parabolic move, that means that valuations are actually came down. So they're for future earnings, they're actually not that high anymore. So even though it went parabolic, you can actually keep going, right? Like AI is a big thing, and now everybody's preparing for AI, so they have these giant orders coming through, and they're the main beneficiary of that. So plus, you don't want to go against Nancy Pelosi. She just loaded up $5 million worth of that around right here in the consolidation. When everybody thought it was coming down, once Nancy started buying, said, "Oh, it's not going to come down. It's just going to go up," and that's exactly what it's doing right here. So you can see right here, he actually had this big consolidation. Everybody thought this was distribution, right? So it did look like distribution, including myself. I actually shorted it. I did shorted it up here, and I did make money on it because I knew uh, I'm not dumb enough to actually hold on to the shorts. I was just kind of trading the head and shoulder pattern. Anyway, once you start breaking back above this shoulder, I was just like, nope, it's not coming down, right? And then you can see he had this head and shoulder pattern, but once he bounced off the neckline right here, once it gap, once it can hold a gap, it's going to keep going, right? Because if it doesn't fill the gap, it basically just means he's going higher, right? So you can see he actually went up, created a higher low, consolidated sideways. He tested that high a couple times before finally the breakout, right? And I did posted this in our Discord that if we break that $500 level, we're going to blow up, and we did, right? I had a $600 target on it, and then I have 550 as the first target. We actually swing trade this with weekly options and make quite a bit of money on it, and I day traded it as well because there's just so much momentum on it, and the SPX wasn't doing much. So this was a perfect day trade. Um, yeah, so right here, I think everybody's looking at 600 and see what's happening at 600. If you break 600 into maybe 610 or so, there could be another move up. Could be going for 650, right? So because we all know how crazy Nvidia could be, right? Because you can see in the past, we just go straight up, right? So right here looks something like right here, right? So imagine, so we're gonna go up, we're gonna come back, like right here. We'll go up, like I'll zoom in, right? It looks something like this when we had that double top, right? So he had like a really sharp run. Everybody thought it was coming down, and then he held, and then we broke out, retest, and then the parabolic move, right? So if our thesis is right, that we're going to run into mid 2025, um, so we could go up and then come back slowly, retest these area, and if it holds, and then we get that big giant parabolic move into year end and into the first month or so, we could see those big levels. We could actually see like all the way up. I think last I looked was around that $800 range. So don't rule out that we can go into higher, right? As long as he holds above this $500 zone, 800 is in the cards for this year and early next year. Apple. So Apple's showing weakness compared to the rest of the things. So Apple had this double top right here, but look, it made a higher low. It actually bounced off the 200. So what I'm seeing is if Apple is to break this high, right up here, we're gonna go higher. So let's say $200, right? Break $200, we're gonna go higher. And if we do go just by looking at it, uh, I would say around that 250 is a good zone to aim for. If this does break out, it'll be around that 250 zone. Just eyeing it, right? We do have a method to measure it, but just eyeing it, I think yeah, right around that 250 zone. So right here, if you're in Apple, what you should do is your stop should be like at this low, right? But I would probably use this low to be more safe. So if you're a long-term investor, you use this low. If you're short-term, you use that low. You want to enter on the break of this and holding above this. It has to be close above 200, not just break and come back down, right? It has to close above 200 and hold it. And if that's the case, then you buy around the breakup point, right around that 200 point, right? And then you ride it back up. Microsoft. So Microsoft was my big winner for the year. So I did uh, I made the most amount of money on Microsoft this year. So um, over here is when I start accumulate into it on the way down around right here, and then once it start stacking over here, that's when I really went in pretty heavy with calls as well as shares that I got accumulated through selling puts. So Microsoft was the big play. It went parabolic right here. I roll mostly this trade right here. Right here, I did went back into it, but smaller size. But like right here is where we made most of the money right there. So you can see right here, this is a big cup and handle. Right. So if you review some of my videos in the past about market updates, we talk about this possible cup and handle at the top and then a breakout. So we see that we formed a cup and handle, we did broken out, and now we're to the moon, right? So key area to look at right now is about 400. If we go through 400, it's very likely that we can run up into this 430 and possibly 460 area. So you see I would set my alerts there. Um, and I think there's a really, really long runway for Microsoft, but because we are timeframes towards 2025, 2026, around there. So if we do go parabolic, uh, you're really looking at like in the 500s somewheres. Like I got an alert here, 560 as a target. So when I did my technicals, that's where it gave me the zone was around that 550, 560 area as the main target for the year. So, of course, it will chop around in between. But these are the targets. These are my shorter term targets, longer term target for the year, and then after that, I'm going all cash. 2020 admit somewhere in 2020 between 2025 2026 is where I'm going to go all cash and then looking for possible short-in opportunities this time around. So AMD AMD might be a replicate of what Nvidia might do because AMD is actually a lot cheaper than Nvidia valuation wise. So for people that don't want to buy Nvidia because it's too high, too expensive, they run into AMD, right? So you can see AMD actually went parabolic. Too bad that I actually saw AMD at the around right here at the highs. Because thinking that we were going to pull back into January, and we didn't, and instead it went parabolic. Right. So if they have earnings coming up, if earnings are good, you're expecting to see $200. Um, that will be earnings. I have some lottos for earnings week at 180, and look at that, we're almost at 180. And I bought the lottos like down here. I only bought enough time for February. I think I bought February the 2nd. On 180 strike. They're almost double now. But if we do run into $200, they're going to make substantial amount of money. And anyway, AMD, once it explodes, I'm looking for a pullback because I need a pullback to get back into it. I do have some shares for longer term. So, like I say, I have a core position and trade around position. So I do have like a bit of shares. I think I have like 1,000 shares of it. That's about it. And mm, yeah, it's once he breaks out on earnings and come back and retest, look for this level right here, this high. If you can hold above this level, it's gonna go way higher. So if you look into the bigger time frame, right, it's got a lot of room to go. So if just by looking eyeing this, I'm looking around that 240, between 240 260 as a potential profit zone for the end of the year. And it could be higher if earnings are good. It could actually run up to $300, right? It really depends what how their earnings call is gonna go and what their guide is um for next quarters. So if it's good, yeah, rock it up. So as you can tell, I'm very bullish, but for the year, while over is very bearish. So they have their reasons, and I see it. I was kind of bearish going into 2024, and then I realized that election cycles, going back some data, it's very rare to have a recession during a presidential election. It's usually the year after or second year after, right? The first 2 years after a presidential election is the lower return out of the four. The best year is the third year, which we had last year, right? So yeah, we're going towards the fourth year. So we should get pushed up. And usually, what happens during election years, they prop up the data so that the economy looks good for elections, and then it's usually a few months to a year after that really those numbers start looking ugly. So yeah. Let's talk about we talk about Bitcoin, so let's look at Mara and Riot. All right, so Mara had this huge run right here, so we caught some of that. I held on to it too long. I thought right here we are going to pause and then keep going. I thought we were going to go over probably around that 50. You can see all the set my alert. I was aiming for 36. Honestly, I was looking for 36. For I thought this would be something like you know, we run up, we pull back, and then we boom hit here or hit here before the big pullback and then into the bigger cycle after, right? But looks like we pull back now. So you can see we have a nice little doji around support. So right here, I'm looking for something like this, maybe like this, um, and then the explosion up afterwards. So timing this to kind of chop around for the next month or two, and then around April is when the big giant pop gonna happen. And the first pop, I probably want to aim for like 36, maybe 50, on the first pop, but and then you'll pull back, and then towards October is when you get that parabolic pop. Uh, and you're looking at the highs right here. So you're looking at $80, but I think we're gonna break the highs this year. I think we're gonna go to like somewhere around 120 and 150. And I mean, it sounds crazy because it's trading at 16, but I've seen crazier things. So, prepare for that. But like I said, you want to trade around these because they do go up and down really, really fast, and they have these big, huge waves. So we can see in the past, like some of these waves are gigantic. So you take a look. This started off at $3. It went up to 57, right? And then it dropped all the way back down to 18 only to go back up to $80. So, I mean, it's not so crazy when you're thinking about Bitcoin, right? Because that's just the way Bitcoin works. That's why I like to trade them. I like, if you know me from a few years back, I hate Bitcoin, right? I think it's stupid. But but now that institution money is embracing it, well, that's a whole different story now. But before, it's yeah, I didn't believe in it before. Obviously, well, I knew it was a trade. That's what I should say. I knew that it was good for a trade, but not good for holding on. And it's still not good for holding on because, as you can see, they go boom and bust, right? So they're boom and bust cycles. So when you're trading these, just keep that in mind. They go boom, they go bust. So when you make your money, get out, and then when you can actually short it down. And well, I wouldn't short it. I would buy puts. But yeah, you can trade up and you can trade it back down. So that's how you can make giant money, right? So if you know how to play this correctly, then you should be able to benefit greatly off Bitcoin prices. And yeah, this year I think I'm going to concentrate a lot on Bitcoin plays. So if you want to join me, make sure you sign up for Discord, right? Um, just to show you what a Discord is like, show you right here. So this is our Discord. Um, so you can see we have different channels here. We have swing trading alerts. So that's the only type of alert that I give out is for swing trades. We do a lot of day trading. So day trading, I don't give alerts. Day trading, I basically teach you how to day trade and you're on your own. The reason why is because if I am in a trade, I'm not going to post my trade, mainly because I'm in it for only a couple minutes. By the time I post it, the trade's over. So I need to pay when I'm in the day trade, and I'm scalping options. I'm not day trading like with shares or futures or whatever. I'm actually scalping options. So there's no way for me to post that because if I am in it with options with a big trade, I'm not going to risk it by posting it. Right? But if I see a setup, I'll show you the setup leading into it, and then you're on your own. But for swing trades, we do give out alerts. So you can see that right here, where this is back in December, we talked about Tesla having a potential, and then it obviously didn't work out. And then he actually reversed back down. So he actually didn't break out, right? So he didn't break. He actually came back down. So, but Nvidia, so you see that I said Nvidia above 500 will run. So that's what happened there. IWM, we talk about the range. If you can hold above the range, you can go. And talk about SMH, right? And then if you go up, You see that we have a lot of different trades all line up, and we have these are ideas, meaning they that they're set up. It doesn't mean I'll trade it, but they're set up for it, right? So we see there's a lot of these trades that we talk about. We talk about snow and Bitcoin and all of that stuff, and majority of these actually worked out. I said there's about a 80% win rate on these, so it's still pretty good, right? You just have to use risk management on them if you get into it, which I teach you in the course. Um, and then we do our swing trades alert. So you can see that this is their latest. I said took profits in Tesla on the shorts, took profits shorting BA, that's Boeing, took some profits off AMD Leaps, right? Uh, Also, some of our trades, SMCI, which is crazy last week, made a ton of money on that. And then trade some stuffs like COH. We trade Neo once in a while. And here, that's my turns for these are my results before I took them all off in January. So that's our latest swing trade results right there. A lot of them are great. We got into the monthly lows, and you see some just train the indexes. I mean, like I made over 600% on the options on the indexes. I mean, they went from 360 to $27, right? That's when that was at the bottom of the cycle. So once you mix that pullback, I told everybody that 4100, including in this channel, that that's where I'm going to back up a truck, and that's exactly what I did, and then it all paid out. So, yeah, so that's our Discord. If you're interested, you can sign up on our website, leadcapitaltrading.com. I also have courses where I teach you how to do this all on your own, because you should never follow anybody, including myself, blindly on these alerts, because you actually need to know how to manage the trade when it doesn't go in your way, right? That's the important thing. Like I have a high win rate, but if that 20% that don't work out and you don't get out, well, you're going to lose all the profits from the other 80% of the trades that do work out, right? So yeah, it's really, really important for you guys to actually learn how to trade, and then make good use of the alerts in the trade ideas once you understand how the market works, right? Just following my trades doesn't mean anything, right? If a lot of people think that you can follow somebody else blindly and make money, it's not the case. You should never follow anybody, no matter how good of a trader they are, blindly, because you have to understand what they're thinking, what they're doing, what's their trading plan, and all of that stuff, right? Because that's really what trading is finding the proper high probability setups and then manage the trade. So if you don't know how to manage a trade and only know how to find the high probability setups, it's not going to do any good. Anyway, that's the end of the video. That's the end of this update. I'm not sure when I'll do the next one. I don't do these on a regular basis anymore. But anyway, like, subscribe, and hopefully we'll forecast what 2024 actually work out the way it's planned. If it does, we're all going to make a lot of money. All right. Peace out.